Okay, everybody, it's me, Gregory Mannarino. Guess what? The market is still open, yes, and I am doing a video blog here. Actually, trading stops in about 30 minutes from this exact moment while I am sitting here. So this is, in fact, my post-market wrap-up on this lovely Thursday. Very lovely. We have so much to talk about. So yes, lovely Thursday. I'm out of my mind. March 24th, 2022. So let's see. We got a warning today from Barclays, one of the largest banks on the planet. We got a warning today from the European Union. We're going to talk about both of these things. We found out yet again that inflation is surging with no end in sight. Imagine my shock there. No slowdown whatsoever. And well, you know, let's put this all together. Let's first look over at the lovely stock market. As I am doing this lovely video blog, stocks are higher across the board, looking very good. Nice rally. Why? Well, a couple things going on. But when you have yet again another Fed president, we're talking about, you know, Lex Luthor himself, yes. Neil Kashkari came out today and he's explaining, well, hold on a minute. I know that some of my colleagues are saying that we need aggressive rate hikes moving forward, but he's like, well, nah, I don't really think that's a great idea. Duh! This is the game. What they always do. They float out these freaks to say one thing and another freak to say the polar opposite, and you knew that was coming, and the market seems to really like what Neil Kashkari had to say today. Yes, the Lex Luthor of the Federal Reserve himself. Period. The freaking end. All right, so look, on the back of Kashkari, market loving that. It wants to hear about more easy money. More rate hikes are coming. It's a guarantee. But as you and I are already well aware, no, absolutely not. They will not be aggressively raising rates because they don't give a damn about inflation at all. We heard, don't listen to me. Listen to the other guy, Fed President James Bullard. He said, despite the Federal Reserve's recent policy announcement, they are continuing to create inflation. Whoa, really? Oh my goodness. I mean, think about it. Think of how asinine this is. We have the federal funds rate at 0.25 to 0.5. Okay. We have inflation surging right now at over 8%. In order for with the Federal Reserve to make any difference regarding inflation, they would have to be raising the benchmark rate above the current rate of inflation, which will never happen, never. And as long as they remain, well, below the benchmark, you're going to see inflation continue to skyrocket. I mean, can I get a duh, please? Maybe a double duh, triple duh. I mean, but again, you know, that's just the way it is in the freak show. And no one's going to talk about this anyway. That's the story. So that's why the market is higher right now. But I want you to, I'm going to let you in on a little secret here, okay? Just between you and I would not be surprised to see some selling pressure in this market relatively soon. Nothing dramatic, people. I am not calling for a crash because I know all of a sudden you're going to see all over YouTube and everywhere else, Gregory Mannarino, he's calling for a market crash. No. I am just saying I would not be at all surprised, and I would probably welcome some of it. Some selling pressure here in the market. It's gotten ahead of itself. We've had like, what, 7 or 8 up days in this market and just like 2 down days. Look, the market needs to give some back. Plus, I still feel that there is this thing just somewhere out here lingering where we're going to see an event here that's it's gonna shock a lot of people. You know, let's put some more of that together real quick. Actually, you know what? Hold that thought. Let's step back a moment. I'm getting ahead of myself. Looking over here at the stock market. Are you watching gold and silver? Doing fantastic. Great today. All right, look, lovely. A lot of you writing to me today, hey, Greg, are you watching the price of silver? It's taking off. Yes, of course I see it, but I really don't care. Look, the price action of gold and silver, it's not real. As a matter of fact, the price action of anything isn't real right now. It's all being inflated by a never-ending supply of debt, which is only going to get much worse moving forward. And we're going to talk more about that too, because that's the mechanism in place. They're talking about famine. Famine, yes, not just food shortages, but famine. That's pretty severe. And, well, you know what? Hold that thought too. Back to the market. So on the top of this rally in the stock market, 10-year yield looking lovely, 2.35. Dollar came down, still higher today. But there's no safety, fear trade really going on right now, maybe slightly. And that may be muting gains in the stock market overall. I already explained gold and silver doing well. Cryptocurrencies, Bitcoin over 44,000. Look, it's a beautiful setup. It's a beautiful setup for you and for me. Now, what I want to do with you, lovely people, and you're all lovely, and I know some of you are naked. I can see you. Please put your clothes on, okay? I know you like to be that way, but sometimes you gotta put some clothes on. All right, look, so I already told you about Kashkari. Let's talk about Barclays here. So we get this warning today from Barclays. Now, they are cutting their projection for the S&P 500 moving forward to about what it is now. And they want people to be somewhat cautious in this market. Okay. Generally, when I hear a major bank say, be cautious, I usually take the opposite side of that trade. I generally do that. You all know that. But here, I think in the short run, there may be some pressure in the market here. I wouldn't be surprised at all, so I don't want you to be surprised. And what's that going to be? Listen to me very carefully, okay? Very, very carefully. As long as the 10-year yield remains stable, okay? No crazy spikes. If it drops, that's a safety trade, okay? That's fine. We don't want to see an uncontrolled spike. If we get a stock market that gives back, let's say over the next week or so, whatever it might be, I want you to look over at the debt market, more specifically the 10-year yield. If you see it dropping, I want you to sit back and laugh like this. I want you to crack up because you know what that is. It's a fear trade, and that means opportunity. You understand? I think my lions got it. Then we pounce, we strike, we start ripping, shredding. When there's blood in the streets, that's when me and my lions pounce, period, the end. Keep some powder dry, my lions, in the event that we get some kind of an event out here that causes the market to fall. Okay, now with regard to Barclays, like I said, and they also went on to say, oh, listen to this. Barclays is saying that the consumer is weak, and they're expecting consumers to cut back on spending. Whoa! You mean, hold on a minute. All the propaganda that we've been hearing from the mainstream media and our retard president, great economy. Our consumers are so damn strong. They're buried beyond their eyeballs in debt and then some, and they continue to borrow. This makes them weaker. All right, so at least we got a squeak here of some truth out of Barclays. The consumer is weak. Yeah, how about that? Let us move forward, people. Now let's look over at crude oil. All right, crude oil right now is under some pressure, and I'm going to give you a couple of guesses why. You see, our lovely president today, who can't walk and chew gum at the same time, he was talking about how NATO, they are unified. Meanwhile, they can't decide on whether they're going to add new sanctions on oil for Russia. That's how unified they are. And because of that, no oil boycott from the European Union. Well, crude oil fell into some pressure here. And there's also talk, again, from the imbecile and all the other world leader imbeciles who are just puppets, you know that, to release more crude oil from the strategic reserves, which won't make any difference. Crude is going much, much higher. Get ready for it. Look, we are going to have an energy crisis and a food shortage and famine. How about this? So we got the United Nations here warning of famine, okay? And they are calling on nations to fund aid packages. I guess they want to starve us all to death. Lovely. Lovely and more freaking lovely, people. Look, I think you get it. You understand what's going on here. Kashkari. Oh, yeah. Oh, ignore everybody else. Listen to me, you see, because I'm Lex Luthor, and I'm telling you that the Fed is not going to be raising rates aggressively. Neil, let me let you in on a secret, buddy. We all knew that anyway, okay? Everyone that follows this blog knew that. You're all full of shit, and we understand what's going on here. With regard to Barclays, I'm just going to recap. They may have a point here, okay, with regard to the market falling under some pressure relatively soon. Let's see what they pull off, okay? Look, I'm not guaranteeing that this will happen. I'm just saying if it does, I want you to be ready for it. And if the market does fall, because you have a brain that functions, are gonna look at the 10-year yield to see what it's doing and automatically know whether this is a buying opportunity or you should get the freak out of the market, okay? In my view, I believe if we get that, you're going to see the 10-year yield drop, and that's going to be a buying opportunity for me and my Lions, and we're going to add to our current positions. We're going to shred this market to death. Anyway, so that's really the story here. Famine and warnings and this and that. Nothing surprises me anymore, people. Do you know why? Because it's a freak show. Freak show. And I guess I'm part of it. How about you? All right, look, this guy here loves you a lot. Please share the video. Get it out there. I will see all of you later. Look, oh, no, I will see you later, but I'll see you in the morning. See, I told you it's a freak show. I'll see you then.